Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, September 30th, 2016. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, drill down to our trade levels, our targets, and our main hypotheses. The reason we create multiple hypotheses is we do not know what the market is going to do, but we can put a plan together to react to what the market does give us. Before we get going, this is a subscription room. If you're interested in taking advantage of coming in and checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. Read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so just a review of yesterday. Yesterday, our main hypothesis was an open auction in range, a move down, and then finding responsive buyers and moving up through to the areas up in the 70, 73 area. We basically chopped around. We were expecting a rotational day, and then we had some news with Deutsche Bank, and that sort of sold us off, and we came down and basically chopped around that key line in the sand at 44, dipped down to the 37.50 trade area, and then rotated back up. Failed to get above the VWAP, and then came back down into the lower distribution, and we got a VPOC shift late in the day down to the 45. We do have a double distribution day from yesterday with the key LVN right here at the 54 area. But all in all, it was, it was tough trading, and I actually got myself a little bit in trouble, and I got lucky and was able to turn a mistake into something that turned out to be a pretty good day. But again, I've got a long dissertation talking about the fact that I went off the reservation and I didn't follow my trade rules, and I've got an action plan in place for today to make sure that that does not happen again. Taking a step back, and I always like to start my day looking at a simple candlestick chart. Start with the monthly, and that's not the right one. Come on. Oh, okay, so I always like to start my day with a monthly, start working my way down. I'm using 9 EMA and a 20 SMA. I'm looking for slope and separation where the trend is being violated or challenged. And I never change this. I do this every day. And you guys probably get tired of hearing the same thing over and over again. But strong upward trend, multi-year, challenged in the end of 15 and beginning of 16. Since then, we've taken it back, and we've got slope and separation. This month, we came down and challenged the 9 from above, but bounced, and currently we're trading up in the 2150. Our open of the month, okay, is 2169, and our daily ATR is 2486. Our critical mass is actually sitting on that 2144 area. So we have to pay attention to that if critical mass kicks in and we get capitulation from the buyers and the sellers take control into the afternoon and take us down through critical mass and turn this into a trending day. But overall, the monthly is positive and in a trend upward. On the weekly, our weekly open is 2156 and a quarter. We're just below it, so we could get back up and if we get back above the open of this week, we could see a push up even further into that 2170 area. But the thing, and the trend you can see on the weekly is holding. We came down and tested the 20 from above, got above the 9, and so far we're holding above the 9 coming into the end of the week. Going to the daily, you can see that we have been in this wide range, this holding pattern. You could take it all the way back, to here, but basically, we've got a symmetrical triangle, and we have not broken out of it. I'm expecting the break of either the high or low to give us our next direction for the next larger handle move. But the daily itself is in sideways consolidation with no real trend. Going to the 4-hour, you can see that again, same thing. We're in this consolidation pattern. There was a naked cross. It just got taken out. Going to the 1 hour, you can see that we're in a downward trend, and they took it back. Right now we're above the 9 and the 20 with the possibility of a start of a newer upward trend on the 1 hour. On the 30-minute, basically the same thing. Most of the session yesterday and overnight, the Europeans came in, okay, and found the bottom down at the low of the night at 35.75, and now they've taken it back up, and they're working it up, and we've got an upward trend starting on the 30-minute. On the 15-minute, same thing. Got a very strong upward trend going. Good slope, good separation. Coming back up to towards the scene of the crime, where whatever the Deutsche Bank announcement is, and took us down, but slowly working our way up. And then the 5-minute, same thing. We're moving back up towards the resistance that we had up in the 53 area in that key CHVN. Wanted to make an interesting note. I did trade this last night. It was very frustrating, but we had a Globex gap, and I started buying to the long side, looking for this gap to be closed. There's only a 99.8% probability that these Globex gaps get closed. Unfortunately, and it wasn't unfortunate. I traded it, and I traded it, and I traded it, and I finally, was positive and gave it up because I didn't want to. I think I quit right about 2 o'clock my time right here. Of course, they did take it down and made lows in Europe, and what do? They come up and they close it out right here on this push-up earlier this morning. But these are very good trading opportunities. When you see this, you want to start trying to take the trade towards the gap. Just don't get stubborn, okay, and just hold. Like I wouldn't, get long here and hold down to here. I was just taking shots at it and building feel, and I finally just got tired of waiting. I couldn't stay up any longer, and I went to bed. But very good opportunity when you see those Globex gaps. This was a really good one because of the fact it was so big. Usually these get taken out very quickly within the first few minutes of the Globex Open. Overnight, we have a pretty decent Gaussian distribution. Of course, as it's been for I don't know how long lately, we're opening near the highs or the lows of the Globex, and we're likely to put in new highs. Our low is intact. Taking a look at the big picture, though, it's getting a little bit complicated because I've got overlapping profiles, but each one is telling me something. So we're in this profile right here. We're in the longer term profile. You can see that value in the longer term is still above at the 73 area, but this 52, 53 area is getting close, and we could see a longer-term VPOC shift down into this 53 area as it is getting much more pronounced. The 2 days from yesterday and Wednesday, the 2-day VPOC is up here at the 6175. I'm sorry, is that correct? Yeah, that's correct. And then the overall, the smaller profile right here, if I bring this to the front, you see that the value is below us at 47. So we've got a lot of undetermined value in this area right now, and we're likely to see a lot more chop today. And I think we're going to see some large rotations as they balance out the end of the quarter. It is the quarter end today. It's the month end. It's the weekend. So we've got a lot. Now I've heard people mentioning that a lot of the funds have been lightening up. A lot of the trading desks are not wanting to go in holding heavy positions into the weekend. I think that this Deutsche Bank is and I'm sure Marvin can speak to that even further when we get into the regular trading session, that this is going to create some opportunities on both sides. Do not get stubborn today. It is Friday, and my recommendation is if you're up on the week and you don't need to trade today, don't trade today. If you're struggling, okay, definitely don't trade today. Go into the weekend with a long weekend in mind, and not any heavy losses from today, because you don't want to have that emotional baggage throughout the weekend. Key levels to pay attention to, obviously the 52, 50, 52 and a quarter up to 53. Our 47 should be our first line of support this morning, but our key line in the sand is still going to remain at 44 and a quarter. It's also our critical mass. Below that, look for them to come down to 40, 50, but I think if we get below the 44 and we do not bounce off this 40, 50 hard, then we're going to go take out that overnight low down at 35.75, and my destination target is still going to be down here. If we can hold above the 44 and get above the 55, there's the CLVN here at 54.50. We have a little bit of a wide LVN from yesterday's double distribution. I'm going to be using between 54.50 and 55.50. But if we get above that, then I'm looking for them to push up through into this 60.75 area and test the top side of this microcomposite value area high up here. So take a look at the overnight. Again, it's hard to put in a overnight high right now because we still have 30 minutes to go, and likely going to put in a overnight high and break it at the same time. But our overnight high as it stands right now, and that's the only thing I can do, is at the 52 and a quarter. So sitting right above yesterday's VWAP and midpoint. Of course, our low is not going to change. That is going to be 35.75. Just one tick below the FOMC scene of the crime. The VPOC is not likely to shift now that we're up here. It's at 47.50. And there's really not much more information that I'm going to be able to glean from the prior session, or from the overnight session. So taking a look at our trade levels. Well, 54.50 to 55.50 I'm going to be using as a trade area. Above that, I'm going to be targeting the range high here at value area high and the IB high from yesterday at the 59 in front, okay, of that 60.75. Our daily ATR right now is running at 24.86. So off of the bottom of the Globex session, our upside daily ATR target is right here at the 60.75. Above that, we've got yesterday's open, and you know, I'm going to be targeting above the 59.50 a break up into this this 61.50. This is where we held value, our VPOC, for most of the day yesterday before they stole it into the close. And then above that, we've got all these things up here. Our weekly ATR is running at 49.25. 49.2625 to be exact, so off of the weekly low of 32.75, our weekly upside ATR target is still above at 82.25, and then we've got the December all-time high and the unadjusted all-time high up at 91.50. To the downside, our month open, of course, is 69. So we have 1 day left of trading. Our daily ATR is 24.86. So take 21.69, subtracts 24.86, and that gives you your monthly critical mass. Critical mass can kick in this month. We haven't had many months lately where critical mass becomes an issue. But this one will. It's also right at a key line in the sand here at the 44, and below that I'm looking to target the 40.50. And then we've got the value area low and the range low down there at the 37.50 and 37.25. And below that we've got 36 FOMC, seen in the current, and the overnight low at 35.75. Now the weekly open is 21.56.25, so weekly critical mass kicks in down below 31. And I would really say that if we get below 31, you're going to see some capitulation. And of course, the target is going to be that 29.75 or 27.50, but I'm using 29.75. And then our daily downside ATR target is just changed because we went up and put a new high in. What did I just say the high was? 52.25. Minus 24.86, 27.50 is our new, is that right? That can't be right. What did we say it was? 52.25 minus 24.86 is 27.50 it is, okay. So our daily downside ATR target is 27.50, and then below that 22. Our weekly ATR is down here at the 17.75, and then the key support is still down here at 21.07. And I'm just going to bring, just in case we get some type of crazy action today, we've got below that, you're going to be targeting the 21.04.50. 2100, the 98, $96.75, and remember that this 80.50 is the longer term a big destination below, and that takes us down into this area right here, which is started this whole run up. This is the last price that they accepted just after the breakout of this larger balance area that's centered around the composite VPOC and the microcomposite VPOC, where we spent most of 2016. Okay. So let's take a look at what our hypotheses are. I am looking for a rotational day today until we break either the 65.75 or break through critical mass and don't bounce off of the 40, 50, or 35 area. So my main hypothesis is an open auction in range or an open test drive. I'm looking for us to come down and take out the naked close and the naked VPOC, chop around in this area, maybe push through to the range low, and then find buyers and rotate us up through and moving back towards the week open at 56.25 and the month open at 69, and just basically a slow grind up. That's hypo 1. Hypo 2, which in my mind is hypo 1B, because I think it's got just as much validity on it with the type of news that we get, is an open auction in range, a push-up, a failure between the 54 and the 60 area, find responsive sellers, rotate down through, chop around on the 44, and then push down through, okay, down towards that 29.75. And close somewhere down here. That's hypo 2. Hypo 2, open auction, in range or open test drive, push up, take out the overnight high or put in a new overnight high, fail somewhere between the 54.75 and the 60.75 area, then rotate back down through, chop around the 44, get continuation, push through the low and come down into the 29.75 area and close down here. Hypo 3 is a open auction in range, a push down, chop around the 37.50, get continuation down to 29, chop here, and then get into a trend and push down towards the 18 and the weekly downside ATR. So hypo 3 is an open auction in range, a failure, move down, chop in the lower distribution, fail, come down, chop some more, and get continuation, and have capitulation of the buyers and the sellers taking control with the break of the critical mass on the monthly. But I'm really looking at the critical mass on the weekly to really kick in both, because of the fact that we're only trading 6 points off of where critical mass is on the monthly. But I think this has got to be our warning line. It is our key line in the sand today, because below it, if we do not come down and bounce hard, then I'm looking for gradual or accelerated move to the downside. Our hypo 4 is an open auction in range, failure to break below the range low from the prior day, and then push up through into the 60, chop around up here, and then push through our upper key line in the sand, take out the week high at 67 and take out the 68 and push up into this area up here and close somewhere between 75 and 85, and maybe put in a new all-time high and adjust the two contracts highs between the all-time in December and the unadjusted all-time high in September. So that's going to complete our pre-market session. We do have a pretty strong trend going so far, so watch the open. Look to see where values put in this morning. The Keltner center line is the 47.25. I'm expecting probably the testing both the 54 and the 47.45 within the IB, and if we get above this 52 upper Keltner line, possibly a line walk up. Below the Keltner center line, a move down to the lower line will take us down into that 41, but it'll probably be closer to the 40.50 by the time we get there. So that is my pre-market. Again, I caution you, it's the end of the month, it's the end of the quarter, it's the end of the week. Just be careful, keep your losses small, and don't get chopped up into the weekend. Take care, trade well, trade safe. We'll catch you on the flip side.